You are watching Market Watch, the brief overview of the key events from the world of finance. Just yesterday we were talking about the fact that inflation may be higher than forecast. As an alternative scenario, an option was discussed in which the consumer price index would increase year on year. This did not happen, but the actual data indicated a price increase that significantly exceeded the forecast. At the same time, prices, excluding the volatile block of energy and food, increased by 0.4% in January, which was the largest increase since April 2023. As a result, we are witnessing massive sell-offs of key stock indexes and the strengthening of the US dollar. But despite all this, there have been no global changes. Nevertheless, it is necessary to observe the reaction of the market in the next couple of days. After all, if the Fed starts talking about the expediency of raising the rate, the activity of sellers on the stock market may increase. We all understand perfectly well that the market lives by expectations of future events. In this case, the decision on the key interest rate, which is highly likely to remain unchanged in March. At the same time, it is already difficult to talk about the Fed's readiness to reduce it in May. It is for this reason that it is advisable to observe the market reaction in the next couple of days. If, on Wall Street, many investors revise their forecasts from 3 cuts in the Fed's key interest rate to 2 or even 1, the US dollar will receive additional support. The US currency strengthened noticeably on Tuesday and still has every chance to continue growing. Nevertheless, there were no global changes, because representatives of the Federal Reserve warned investors that inflation remains stable, and therefore expectations of a rate cut are groundless. Shifting to the cryptocurrency market, let's pay attention to its correlation with the stock market. It's not just that the sales of key US stock indexes coincided with the collapse of the largest cryptocurrency, but also about testing and then rebounding from the psychological level of resistance. At the same time, it is important to take into account that the emergence of a strong bearish fundamental factor for the US stock market, which also put pressure on Bitcoin, occurred after testing an important psychological level by the S&P 500 index and BTC. It turned out that initially technical analysis gave a bearish signal, and then a fundamental factor contributed to its implementation. However, the global trend remains bullish, although the risk of a deep corrective wave remains elevated. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.